All right. So P2P trading is live on ByBit. Secondly, there are a lot of promotional things that is going on right now on ByBit under the P2P trading. So what it means is that they're trying to give away stocks for people who engage in P2P trading on ByBit. You see the link right there that you can see the promo link right. I'm going to paste it in the community, in the Telegram community and the WhatsApp community. Just go take a look at it and see what you got in there. There's a whole lot of beautiful rewards up in there. Just be part, just trade as little as you can on the ByBit P2P trading, and you will be eligible to take home free dollars. You need to sign up using my link on ByBit. You also need to sign up on TradingView. Okay, the TradingView is where we do the analysis, where we draw all the charts, where we read all the candlesticks and everything. ByBit is where we translate the candlesticks and analysis into an actual trading, and so where we do the actual buying and selling, and that's also where we take the profit. All right, so I'm just gonna move on. So right here, how did I learn? I learned by doing. I didn't just learn by listening. Practicing makes you perfect. You understand that? So when you practice, you become perfect at what you do. But if you don't practice, you won't be able to get to the top of your game. All right. So today it's about candlesticks anatomy. All right. The last class, I introduced us to candlesticks, what they look like. I showed us on the TradingView platform. You saw what candlesticks are, you saw what they are, you saw the colors, you saw their shapes and all kinds of things. All right. So today we're just going to be looking at how to read these candlesticks, how to understand them. Basically, bearish engulfing bar consists of two bodies. All right. You have a smaller body and you have a bigger body. The smaller body is the green candle and the bigger body is the red candle. So the first body is usually smaller than the second one. The second candle is going to be bigger than the green candle. All right, and you can see the picture right there on my screen. So what does this pattern tell us? This pattern tells us that sellers are currently in control of the market. There are two types of sellers: the ones who sell a token in order to take profit. All right, and the other types of sellers are the ones who wants to push down the price of a token because that's when they are making money. Beautiful. All right, so on the bearish engulfing bar that we're talking about, when this pattern occurs at the end of an uptrend, this indicates that buyers are engulfed by sellers. And this signals a trend reversal. All right, so this is what I'm trying to tell you. Now, there is what we call trends in crypto. All right, by next week or next class, we're going to look at what trends are like. Okay, so and then you're going to understand what is uptrend and what is downtrend. When this pattern occurs at the top of an uptrend, usually we have this pattern at the top of an uptrend. Okay, that is why it is called bearish. All right, so it means that when there is a bullish trend before already, when there's an ongoing bullish trend and you have this pattern at the top of that bullish trend, it means there's about to be a reversal. Okay, a reversal means that the market is about to go in the opposite direction. All right, that's what I mean by reversal. These are terms, okay, that I'm going to be using as we go on in this class. Okay, so this is a clearer picture of what the bearish engulfing bar looks like in an uptrend. So you can see there was an uptrend going from the left-hand side. All right, at the top of that trend, we have our bearish engulfing bar. You can see the small green candle right there, and you see the bigger red one. That's sort of like 4 times the size of the small candle. And from that point on, what happens? The trend of the market was reversed. Next, we'll talk about the bullish engulfing bar. Bullish engulfing bar consists of two candlesticks. The first one is a small body, and the second one is the engulfing candle. It tells us the market is now under the control of the buyers. Okay, guys, I'm going to tell you something again right here. You need to get your pen and your paper, and you need to take this down. There are two types of buyers, guys. The first type of buyers are those who buy a token at a cheap price, okay? So for example, today, right now, Bitcoin is hovering around 40,000, 39,000 and stuff like that. So let's say tomorrow, okay, I wake up tomorrow and Bitcoin happens to go down to $20,000, $20K. All right, I'm not saying it will, guys. So if Bitcoin goes to 20K tomorrow, guys, what that means is that there are people who will want to buy at that price. People that never had Bitcoin before, people that saw that, oh my God, Bitcoin is now cheap. I need to get in as fast as possible. You know, the first type of buyers, all right? And the other type of buyers are the ones that they want to push the price of Bitcoin over to 70K because that is only when they can make money. Guys, I will tell you later on, there is a reason why I'm telling you this, guys, and you will understand eventually. By the time we get to the part whereby I'll be talking about spot trading and leverage trading, that is when you will understand. Point number one, guys, in an uptrend, a bullish engulfing bar indicates a continuation of the trend. All right, guys, I mentioned that there is what we call trend, where eventually we're going to get there. You will understand what is trend, you will understand what is uptrend and downtrend. All right. Point number two, a bullish engulfing candle at the end of a downtrend signals a trend reversal. When you find this candle pattern at the end of a trend of a downtrend, all right, it means that there's about to be a reversal of that direction. It means the market is about to reverse and go in an opposite direction. All right, guys, that's about it. I'm gonna move to a new picture that shows you clearly a bullish engulfing bar in a trade picture. So you can see my screen right now. This is an example of a bullish engulfing bar in a market trend. All right, you can see from your left hand side the trend was going down, so the market was going down. All right, but soon as we reach the bullish engulfing bar, you can see the size of the green bar is bigger than the size of the red bar. So right here in this picture you're seeing on my screen right here, you can see at the end of that trend right there, we have a bullish engulfing bar. And just immediately after, what happens? The market began to move in an opposite direction. And that was the trend reversal. So number two, it means there's about to be a reversal of the previous trend. So if the previous trend was a downtrend, it means now there's about to be an uptrend of the price action of that token. Here we talk about Doji Can Do. Guys, the last time in the last class I mentioned Doji, and I said I was going to tell us about what Doji is. I love Doji Can Do so much because it's a unique candle, right? And it tells you a lot. Doji Can Do means there is equality and indecision between buyers and sellers. It means there is no one currently in control of the market. It just means that at the end of the day, the closing price and the opening price will all happen at the same price level. When Doji Can Do occurs in an uptrend or a downtrend, it indicates that the market is likely going to reverse. All right, guys, that's point number one. Point number two, when you see a Doji Can Do, at the bottom or at top of a trend, it is a sign that the previous trend is already what? Is already losing its trends. So what it means that if previous trend is an uptrend and you see a Doji Can Do, it means the bulls are losing their strength and the market is about to reverse. When you see a Doji at the end of a downtrend movement, it means the sellers or the bears are losing their strength, they are losing their power, they are losing their grip on the market, and there's going to be a reversal sooner or sooner. Good. Bulls are the name or sort of a slang we use for buyers or people who are always want to see the price of a token go up. And bears is a slang we use for sellers or the people who always want to see the price of a token go down. You understand, guys? And this is a bigger picture where you see a Doji Can Do in action. There was an uptrend, okay, where you see the candles going up, going up, going up, and at the end of that, at the top of that, there was a Doji candlestick. And what happens after that? The market reversed. The market turned back or made a U-turn and began to move in an opposite direction. All right. This is exactly what the Doji candles tells you. So in this case, for example, when you see a Doji candle, either at the top of an uptrend when the price of a token is going up, it means there's about to be a downtrend. When you see a Doji candle at the end of a downtrend, it means sooner or sooner there's about to be an uptrend, and that is when you need to buy. You see a doji candle at the top of an uptrend, it means there's about to be a market reversal. What do you need to do as a trader? It means you need to exit. It means you need to sell and take profit. The dragonfly doji is formed when the open high and close are the same. So when you have the open price and the close price about the same level, but what happened? Merely seeing this candle alone. All right. It means that the price opened right here. All right. This was the opening price. And sellers were pushing down the price up down to this level. But just right there, buyers, they came in with a more powerful force and they pushed the price back up to where the previous price where it opened before. And they held it there till that trading session was closed. If you want to learn about what trading session means, guys, you need to watch video day 1 and day 2. How do you interpret a dragonfly doji? Number 1, it means right here there was a high buying pressure. Number 2, when you see this candle at the end of a downtrend, it means there's about to be a bullish reversal, and that is the time to enter the market. So you can see right there, this shows you a snippet of a trade where we previously have a downtrend. Okay, the price of this token was going down, and right there you can see right there a dragonfly doji just showed up. All right, for a trader like me, once I see this, there's about to be a bullish reversal. A bullish reversal means that the price is about to go up. So right here, we're talking about the Gravestone Doji. The Gravestone Doji is the bearish version of the Dragonfly Doji. All right. It is formed when the open and close price are the same. And it indicates that the market is testing a powerful supply or resistance area. So guys, what this means is that Gravestone Doji, you will usually find it at the top of an uptrend. How do you interpret Gravestone Doji? 2 ways, guys, 2 basic ways, all right? 1, it is interpreted as a sign that bulls are losing momentum and the market is ready for a reversal, all right? It means the market is about to go down, guys. Number 2, it means buyers are no longer in control of the market, guys. These are the 2 ways that you can interpret a Gravestone Doji. These are the 2 meanings, the 2 basic meanings that you have behind the Gravestone Doji, guys. And you can see the Gravestone Doji right here in a full picture, in action, all right? In a more elaborate trading picture right here. There was an uptrend. That's the price of this token was going up. And soon after we reached the top, there was a Gravestone Doji that showed up right there. You can see right there in the circled red box right there. That's a Gravestone Doji right there. And the moment it showed up, for a trader like me, what does it mean? It means it is time for me to exit the market. If you are already in profit, it is time to take it. I want to talk about the Morningstar candle. All right, the Morningstar candle is a bullish candle. It's a bullish type of pattern. It signals a bullish reversal. And you will usually find it at the bottom of a downtrend, guys. The Morningstar pattern consists of 3 candles, guys. 3 candles, all right? It usually occurs at the bottom of a downtrend and it usually signals a bullish reversal. All right, how do you interpret a Morningstar candle pattern? It shows you that buyers are about to take control of the market from the sellers, or it means that buyers are already taking control of the market from the sellers. Number 2, when you see it at the bottom of a downtrend and it happens to be near a support level, it is a powerful trend reversal signal, guys. It consists of 3 candles. You have 2 red candles and you have a green one. All right. But you need to ensure that they occur together. I mean, like, you need to ensure that they are together like this. And when you see the last green candle bigger than the size of the previous 2 candles, and that's your cue right there. That's your signal right there. It means there's about to be a bullish reversal. This is it right here, guys. You can see right here, there was a trend, there was a downtrend right there. And right here, the moment you see the Morningstar candle shows up right there. You can see a red candle, you can see a middle candle that looks like a doji, all right, and you can see a green candle after. Right there, just moments after that, the price of the commodity or the price of the token starts to go up. The market starts to go up in an uptrend direction right there. Guys, in some cases, please remember, the candle in the middle might look like a doji. In some other cases, it might have a bigger body than a doji, but you really just have to take into consideration the two surrounding candles, all right? And you need to watch out if it occurs at the bottom of a downtrend. That is what you need to look at, guys. So that's about it, guys, on the Morningstar candle. Let's move on. Technical analysis is really wide, okay? It is not what you can do in a single day. It is not what you can do in a single week. It is not even what you can do in a single month, guys. It's a whole lot, all right? And it takes a lot of practice, guys. I need you guys to take this down. Pick your pen and your paper, write down this pattern, and you go do a little Google search on them. Learn what you can about them. Go read up on them. Learn what you can about them. And you can come back and ask your questions. All right. I want to say thank you guys for being part of tonight's class. I want to say congratulations for being part of this journey. It's about spreading the knowledge of cryptocurrency across Africa, courtesy ByBit.